Traders, it is Tuesday, May 21st. Hopefully all of you got the memo that we're going to do a live event today and not the normal time on Wednesday. Harry, how are you doing?
I'm good. How are you, Pete?
Things are pretty good. We're watching the paint dry a little bit this week, kind of expected. We don't have a lot of news to drive the market right now.
Yeah, I mean, I think everything until Nvidia reports tomorrow night. Nvidia, obviously a market moving event, is on a little bit of hold for investors and for traders. Hard to make a trade.
Not expecting the FOMC minutes to do much of anything tomorrow. They've been very vocal since the FOMC statement. So what are they going to say that they haven't already said? There's not a lot of news to bear out in those FOMC minutes. So yeah, we're waiting for the Nvidia earnings, and then we've got a holiday coming up this weekend. That typically sucks the life out of the market. It'll probably drag Tuesday along with it. And then as we start looking into next week, we don't have a lot of economic releases next week either. So it could be a bit of a dull stretch in here. And I think durable goods orders, which is not a big deal. And second look at GDP comes out next week. So could be pretty quiet here.
Yeah. Let's talk about our picks.
Yes, I got AVGO queued up. That was your pick.
Yep. And if you took that AVGO trade, I think I announced it was around 1380 at the time. Anytime from there on, you could take profit. If you haven't taken profit, I assume you should probably take it now, which, you know, in general, with these tech stocks right now, you got to expect, no matter how Nvidia reports, it's going to have an impact. So you really have to kind of keep in mind that there's going to be this umbrella effect from those earnings. So if you're in profit on AVGO, which you would be if you took it when I suggested it, you should take that profit. I'm going to pretty much assume everybody who took that trade has already taken profit. Should have been a call debit spread, and you should have been out by Friday with your profit.
Yep, and that had a really nice move up to the 1450 level. SMCI, that was my pick from a week ago. That was also right in this level. I didn't realize that you and I had kind of doubled up on the whole AI chip play, but both stocks were so strong. You could see that even from the time we concluded the live event, the stock continued to surge higher. So if you traded it, you had some really nice profits. Hard not to take profits when the stock goes from $900 to $950. But if you held on, you still have a chance to exit right now. Again, ahead of Nvidia earnings for a nice gain. By the way, I just want to point something out on the charts as you're going to be seeing. I've got a new system, buy and sell signals, that you're going to be seeing on the chart, and they span all the different time frames. So a yellow arrow is going to be a sell signal, and a blue arrow is going to be a buy signal. So this would be a pivot, and I'll go into the daily chart on SMCI, and there you can see on a longer term basis, really nice buy down in here, sell up here, short up here, buy here. So it's currently on a longer term buy signal right now. And I also have new buy and sell signals on the S&P and on QQQ. And I'm going to flip over to that very quickly. You'll see this is an exit. That was a long right there. So this system does actually have buy signals, exit signals, which are blue, and short signals. So when it goes from red to blue, that means you were short and you're out. You've just gone to the sidelines. You're short and then you're out. Here you've got an actual buy signal. So love it. Really promising. Still plenty of testing to do. Been working really hard on this, and going to be taking a little bit of time off. So we're not going to be doing a live event next week. Going to regroup, decompress, and then I'll hit this hard and see when we might release it. Still got more testing to do, like I say.
And of course, like I said, if you're in profit on SMCI, once again, I'd recommend taking that profit, you got to just consider it's as if SMCI has earnings Wednesday night, just like Nvidia does. I mean, that's going to be the type of impact. So if you're in profit, no reason to risk that.
I did have another trade on Sunday. So if you watched my Sunday video a couple days ago, I'm going to put up the 15-minute chart so you can see what it's done. The Sunday video, today's Tuesday. This was the price action Friday. That was the open on Monday morning. So you can see CRWD is higher. I did have a little bit of a earnings related play in here. And my thought on this was, first of all, the strength in CRWD had been fantastic in here. Also, PANW was going to be reporting earnings yesterday. I was cognizant of that. And my thought behind it was, if PANW came out with good earnings, CRWD would participate to the upside because it has been the stronger of the two. If PANW fell back, CRWD would not be impacted to any great degree because they have different security models. And the one that CRWD has been embraced, PANW. Let's take a look at that chart and you can see the post-earnings reaction. Not great, but it is putting in a nice bounce here. And we have been long PANW from here when it made a higher low double bottom. We were selling out of the money bullish put spreads. It has been a long of ours in here, especially when it broke out above the 100-day moving average. So we've made some money on PANW along the way here, but this gap right here on a daily basis is still being preserved, meaning that did provide some resistance here. So now we'll see what the stock does and if it's able to fill the gap and continue to go higher and fill in some of that D1 gap. But you don't like to see these negative earnings reactions like this.
Someone asked me about my JPM trade yesterday. So here was the thinking behind it. At 11:50 a.m. Pacific time, so you're looking at what, 2:50 Eastern. There was a news announcement, a negative news announcement from Jamie Dimon, and so you see this long red bar here come down. And when you get a news announcement like that, you see this initial response. What I am then looking for is how quickly is it going to retrace, right? Is half of that bar at least going to be erased? So then you can see the next 5 bars, you get just a little bit of retracement. And then on the fifth 5-minute bar at 12:15 or 3:15 Eastern, it starts to descend back down again. And so you see JPM now, and it's an orderly decline. You know, you're not getting another huge red bar. You're seeing some consistent selling with decent volume going down, 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 down. So I took the at the money puts, or right around at the money puts, because the way the IV was working, the delta on those was close to 0.6 at the time. And I took profit at the end of the day because, as it being a news event, I did not want to hold it into the overnight. Those type of events, you never know how much was priced in. You never know how much was exaggerated on the news event. All I knew was that in the temporary 5-minute intraday price action, I had some orderly selling that I could count on. That long red bar wasn't retraced. I was able to capitalize on that, take a $1.05 profit on the puts, and then get out of the trade. And as you see today, it's not completely retracing, but you're getting some relative strength back in it today, showing so the move is a little bit exaggerated, not terribly. It's still down from yesterday's highs of around 206.50, so it's still down around $9 from there, which is a lot for that stock. But there was no need to hang on to that position after that. It was sort of an ideal day trading scenario.
Beautiful trade, awesome trade. And so, yes, this is the long red candle that Harry was referring to. More than half of it was preserved. You can see this height, the top of this second candle did not even retrace half of it. Candle closes on its low and on the low of that red bar. And so now you can see that the selling pressure is persistent. Can't get off the deck. New low of the day. Hello, that's a short, and look at the volume. See how nice, tight, and orderly these candle bodies are? That's the pattern we look for. That's what tells us that institutions are in there playing whack-a-mole with this stock. Every time a little buyer comes in, wham, wham, wham. So yes, the stock pulled back, nice exit. You can see we got a bounce today. And JPM actually does play into our longer term market analysis because it impacted the entire financial sector. So I'm going to put up XLF. That is the financial sector ETF. And we can see on a D1 basis, it puts in a long red, almost bearish engulfing candle. Didn't open above the high from Friday, but otherwise that would have been a long red bearish engulfing candle. It definitely weighed on the market yesterday. And you can see this is about where the news on JPM came out, and that's the selling pressure that we saw the rest of the day. So on a D1 basis, as far as the market is concerned, as far as what I'm looking for, you have this breakout through horizontal resistance and a long green candle. We want to see this long green candle preserved. We want to see the open of that long green candle preserved. That level is 525 on SPY. Now, when you get the breakout, you do not have to rush in and buy. You want to wait because it's the follow through that's going to make us money. And we need to make sure that this doesn't get reversed right away, because if this is a long red candle after this breakout, we are going to see a nasty backside as all of these bullish speculators get flushed out. And so that's fine. We're treading water. We're holding the high from that long green bar, but we need to see follow through, and we need to see it soon. The longer we linger up here, the greater our chances of a retracement. And this is a sign of selling pressure. That's why we want this supply worked off, and that's why we want to advance. So from a market standpoint, I believe that we're going to get a decent reaction to Nvidia. At least it's not going to weigh on the market, and that we will gradually float higher for the next 2 weeks. Why do I feel that way? Because we've had a lot of strength on this bounce. We had a lot of strength in the trend earlier from November through March. We had a pullback, so we need to be mindful that there are sellers here. Okay, this is not going to be an easy path higher, but in light volume with no news coming out, the prevailing trend tends to be honored. And so you just kind of grind higher. And then if you see mixed overlapping candles like this with very tiny bodies, that is when you take gains on your swing positions, your long swing positions. We bought here, we added here, we're looking to add here. And now after tomorrow, I would add if the reaction is decent, and then look for an exit point. If we get a drop below that 525 level, I would hold off, especially if it's a close below 525, I'd exit long swing positions. I'd go to the sidelines, and then I'd watch to see if this breakout here from the prior all-time high holds. That would be fine. Then we could keep going up from there, but I'd be very careful in here. And the fact that financials are not rallying right now, that has been a major sector that has contributed to this big market rally in here. And if you don't have financials pushing the market higher, where's the strength going to come from? Got to have some other leadership.
I have a trade that I like. It's a little bit of an unusual trade, but I'm sure a lot of you out there are looking at, you're seeing Nvidia is about to report, and the most common thing for a retail trader to do would be to load up on those out of the money calls or puts. And market makers know that. You can see the premiums. They're very high. They're going to punish you for doing that. And you're going to need an oversized move in Nvidia to make any money there, if you're playing it on the option side. However, when you're looking at sort of those umbrella effects, I'm looking over here at AMD. And what I'm looking at is AMD has an average weekly move. So if you look at the ATR of around 4%, that's the average move on AMD. It's going to move roughly 4% in either direction, right? So you're looking at around a $6.50 move on average, plus or minus any given week on AMD. But now, so I look down here at the current projected average move for the rest of this week on AMD, and it is $7.38. How do I know that? But you just add up the straddle, right? You're adding up the 165 calls and the 165 puts, and the calls are $4 and $4, and the puts are around $3.35 or so on. And so you get an average of that at around $7.35. So when you look at that, what you're seeing here is market makers are predicting around a 4.5% move in AMD for the remainder of this week, as opposed to the average, which is 4%. Well, AMD has two things. AMD has a catalyst today. They have a conference that they're doing, and they'll be announcing whatever they're announcing. And then you obviously have Nvidia earnings that are going to impact it. So what I'm seeing here is when you're doing a straddle, what you're always looking for is there, the only way to profit on a straddle is if market makers have underestimated the size of a move. And here you have market makers estimating the size of a move on AMD to be roughly around the average move AMD experiences on any given week. However, we know with Nvidia, no matter which direction Nvidia goes, AMD is going to be impacted either positively or negatively. And also you have another event that might impact it positively or negatively. So looking at this here, do I think AMD is going to move by Friday more than $7.40 in either direction? You have a slight edge there in assuming that, yes, it will, based on the two potential catalysts that are coming up. So if you're really sitting there suffering FOMO and you're really sitting there thinking, you know what, screw Pete, screw Harry, screw them all, I'm going to go for it. I've seen too many post of people saying to me 5,000% on out of the money puts on GME or Nvidia or whatever. So I'm just going to do it. If you're really going to do something FOMO like on these earnings, be at least smart about it. Take your best shot, and your best shot to me on playing Nvidia earnings, if you really must go in that direction, is playing an AMD straddle on the 165 strike for expiring on Friday. That to me is your best bet. Obviously, when you look at a $7.40 there, you're looking at anything with anything below 157.60 or anything above 172.40, you're going to be in profit, and that's sort of your range on AMD. So to me, that's if you must play it, that's how I play it. But that's just looking at the historical, looking at what the market makers are currently putting in there, and going under the assumption that the market makers are underestimating an AMD move this week. That's how I would play that. Up to you. Nothing wrong with saying, hey, I'm going to stay in cash.
I took a look at the last move, and it moved about $19. So yes. February 20th is from the close, February 20th, which is when Nvidia announced after the close, to the 22nd, which was 2 days later, you had about a $20 move or so.
So I just wanted to throw it out there because reality is I know a lot of you out there are still going to go, try your luck at something out of the money on one of these huge market moving events. I'm not going to just sit here and pretend you're not doing it. So that's what I would do.
I like Microsoft this week. I think that's going to be my pick of the week. I love this breakout through the high minus trend line here. These are automated trend lines, incidentally. You can see how it's been able to also touch this horizontal high that previously was 430.82. You can see how we're through that point right now. Market's been muddling around today, not really doing a whole lot, but Microsoft has been able to continually grind higher today.
So here asked me, By the way, I love Microsoft. I think that's a great pick. Microsoft is also the all-time high in Microsoft. It was 430.82. It's at now 431.26. I love all-time high stocks simply because there are no bag holders up there, and anyone who went long on Microsoft this morning, let's say, or in the last couple of days, they're in profit right now, and there's no reason for them to sell. So I do like Microsoft. If you wanted to be conservative about it, you wait until Nvidia earnings come out and then you make your Microsoft play. But I think Microsoft is a real if you didn't pick it, Pete, I would have. I love it.
Well, Jose Luis also picked it. So he said he bought some calls yesterday and he's riding that puppy higher today.
Great move. Great move. Jose, you're in profit.
TZ asks, Pete and Harry, would you ever let your expected value dictate when to take profit on your trades? And so why don't you answer that, and then I'll take a little bit of a shot at it.
The question on when to take profit, there's a lot of differing opinions here. There's no doubt in anyone's mind that the most successful traders add to winning positions, period, right? The least successful traders add to losing positions. That isn't an opinion, it's just straight fact. The question, of course, is whether you're adding to that winning position or not, is when to say, good, I'm out. And there's a couple of thought processes here. One, what is your time frame, right? Is it a day trade? So let's say you're trading today and you're like, you know what? There's too many volatility events. Whether I agree with you, the minutes are probably going to be a non-event, but there's the minutes tomorrow. There's Nvidia earnings. I'm going to keep my trades very short term. Well, when you're short term trading, then your expectation of what your profit would be, and also where you're going to take a loss, is going to be far more narrow, right? So let's just say, looking at that JPM trade, I went in there in my mind thinking, you know what, I want to make $1.05, somewhere around there, which means I need about a $2 move in the stock because the delta was around 0.5, 0.6, and that was my line in the sand. I didn't care after that. If it kept going, it kept going. If it bounced, it bounced. That's what I thought I could hit. That's what I wanted to reach, and I kind of put that order in the moment I put the stock in. However, let's say you have a longer term view. For example, if I look at a stock like Google would probably be my pick for the week. Google, beautiful daily chart, right? Google, much like Microsoft, also right around the all-time highs here. You had a great breakout off the earnings. Then it retraced. So, you kind of have your gap here with a low of around 162. And then it just started to really move up with one day exception on Monday, the 13th. Nice steady incline here. It is not that extended from its EMA. So Google is a trade where that might be something where I would look at and go, you know what? On Google, I'm not looking to day trade Google. I'm looking to maybe take calls out into June. I'm looking to maybe grab the 170 calls for $8.80 and hold those. And I'm going to hold those for a week, 2 weeks. And then I look at the Google chart and I see there's not really much in terms of resistance. If you drew your trend line here from the top of 430, and you drew it right up, you would be connecting right around 180. So at 180, I'd start looking at it and say, okay, I'm in profit. Now I'm looking to see, is it break 180 or does it retrace off that trend line hit? If it starts to retrace, I take profit. If it breaks through, that would be the point where you add to the position. So that's kind of, you have to look at your timeline, and you have to look at whether or not you have a point where you would add to the position. But taking profit is, people say you never go broke taking profit. That's not true. If you're taking profit much faster and holding losses much longer, you will go broke. So taking profit and when to take profit is really the most crucial decision you can make as a trader.
Yeah, I agree with almost everything, well, pretty much everything that you said. But the very first point you made was your timeline really determines what your target profit should be. And so if I'm day trading Google today and I see this kind of market garbage in here where we get a nice little rally early, we get a pullback, we have a technically an inside day. That's where the market opened yesterday. So we poked a little bit below that low, but we're right inside of yesterday's range. We have no news. There's nothing going on. We got mixed overlapping candles. So already the table is set for me to tame my expectations for how much money I might possibly make on Google today. So you watch the market. If the market starts floundering around today, you get the high of the day, and then blam, you get this bearish engulfing candle. Okay, warning, warning, warning. Market might have just hit its resistance level. No matter what my target on Google is, I have to respect what the market's doing. And so I'm already getting into a profit taking mode on it. If I go back and I set a target profit for Google, and I happen to be trading on May 15th, when the market just continues to grind and grind and grind higher, I have a bullish trend day in the market. I am going to add to the position, expecting that Google is going to continue to lead the charge. Again, you want to make sure that Google's preserving its relative strength so that when the market's going up, it's leading the charge. And as long as Google is doing exactly what it's supposed to be doing, as long as the market's continuing to move higher, I'm going to stick with the position. You have Google on a swing basis, you get this bounce in here, you buy some here on the test of the 100-day moving average in the bounce. Great. What did Google do? You got a breakout of the S&P above AVWABQ in the 50-day. I add to Google here. You've got a breakout to a new all-time high. If Google's leading the charge, I'm adding here. So this is all based on what your timeline is. And so you're adding all the way up.
Your SMCI, by the way, really powering up at the moment. Really nice move. Again, it's obviously risky to trade that right now, but it's a nice strong move today. It's following up Nvidia, which was down quite a bit, $15, and that's also moved up. Someone asked here, what is my opinion on futures traders? Well, look, I mean, the appeal of futures trading is clear, right? You get an immense amount of leverage. It costs a lot of margin to do it, but you get a lot of leverage as a futures trader. You can get in and out, you can day trade it. And a small move in the market, particularly if you're not trading the minis and you're trading regular futures, ES, you can make quite a bit of money as it goes up or down, depending on how you're doing. The problem with futures trading is that you can get wiped out, and you can get wiped out really quickly. Obviously, we advocate for the surrogate of SPY, right? Which is if you're in a relatively strong position, and we say this every week, if you're in a relatively strong position and you see, okay, I have relative strength, whether it's, you're looking at Nvidia right now or SMCI, whatever it is, you can go long there or you can go long SPY, right? If you go long SPY and SPY drops, you're going to lose money on that position. If you're long the relatively strong position and SPY drops, that position, because of its relative strength, is going to hang in there better than if you were in an actual index market position. So your loss would be mitigated, or you might not lose at all. If it's truly relatively strong and that strength maintains, it may even continue up as the market's dropping, which is your best case scenario. So there's a lot more opportunity in identifying stocks. So if you're thinking, oh, if I trade futures and I'm very bullish on SPY right now, and I'm going to go long ES on S&P futures at the moment. Well, if you went long on a relatively strong stock, your potential for your profit potential is actually much stronger statistically on going with the relatively strong stock. So that leaves you with only one thing: leverage. And yes, if you are adept at trading equities, meaning, and by this, I'm saying there's a very high standard here, meaning you have been able to master trading equities to the point where you have consistent profitability month after month. What does that mean? That means at the end of each month, you are actually able to take money out of your account, the profit, whatever amount the profit you want to take, and put it into your bank account. That money is now yours. You're using it for bills, using it for whatever. That's sort of like your salary. If you're able to do that consistently and you have now mastered equities, by default, you can't master equities without being able to have an excellent read on the market, because on any equity trade, the first thing you should be looking at is the market. So if you're able to master equities, you then now can say, okay, I have a very good understanding of the market. I'm going to avail myself to taking advantage of the leverage that futures offer. And then you can start trading futures. But too many people jump straight into trading futures without first mastering equities. And in doing that, they do not have the foundational understanding of the market they need, and they're playing with fire.
Very well said. Yes, market first. So you do have to have that knowledge and that skill set. And once you have that, then your ability to pick stocks also becomes very important. If I like to play tennis, which I do, why the hell would I want to play with a wooden racket when I can have a graphite composite racket with a racket face that's twice the size? My odds of hitting a good shot are dramatically better when I use that graphite composite racket. If I only can play with a wooden racket, I'm going to play with a wooden racket. No problem. Okay. Because I love to play tennis. So it's all about edge. Where are you going to find your edge? Where's your cushion? You're not always going to get the market right. And when you get the market wrong and you're trading S&P futures, you're going to get your ass handed to you. But if I was short yesterday, let's say I'm really bearish yesterday, the market looks horrible, and I go in and I take a short in JPM yesterday, guess what? I am going to make money because I picked the right vehicle. I picked the fastest horse. This is like the Pony Express, where you're riding a horse hard, and as soon as it tires, you jump on the next one. That is efficient. And so with the market yesterday, put the overlay of the SPY up, and this is exactly what Harry was talking about. So in here, you're starting to get a market bounce. Look at what JPM does. It continues to sell off. So you could weather that market bounce because the stock didn't do anything when the market bounced. So now you're able to stick with the position and even add to it. And now it continues to fall. So futures, the way that I look at futures, again, if you're on a day like May 15th, which I just highlighted, which was this long breakout bar right here, I'm trading stock. I want to get some extra long exposure because I'm identifying this as a bullish trend day. I'm going to add S&P futures along the way in here to give myself the kicker that I need. And instead of spreading myself out more and more across 5 or 10 different stock names, I could just buy the futures contract. So yes, I do trade futures, but I trade futures very selectively. And there are a lot of days when trading futures is extremely difficult because you have nothing but light volume chop and mixed overlapping candles. If you know how to trade that, good for you, because 99% of people don't know how to trade that type of environment. And there's always a stock that's breaking out through the prior day's range that has really nice, strong technicals, but the S&P does not always have that.
Most of you also do not want your asses handed to you, because I've seen some of you and your asses are really ugly. So you don't want that shit coming back. Someone here said, Eli Lilly had a good breakout today, although it did retrace half the candle. Good idea to place an alert at high day or at least over VWAP. I love the Lilly breakout. I do. It is breaking through an upward sloping trend line coming from April 10th. It is reaching out towards an all-time high, which it has surpassed, and today reached an all-time high. If you're going to play Lily, and it's right now dancing around VWAP, you could look. There's nothing wrong with it right now. You just do. This is where you do a call debit spread, and it kind of goes towards Michael Darnham's question on debit spreads. Yeah, they should, particularly for low balance accounts, you want to use these debit spreads, particularly when you have a stock like Eli Lilly, right, where it's cost prohibitive to just buy the stock, right? And the options themselves, straight options, are also going to be pretty expensive. But if you did an 805, 810 call debit spread for, let's say, $2.15 or somewhere thereabouts, if you can get that price, you want to do it. Always, you want to do your debit spreads less than half of the spread. So if it's a $5 spread, you're looking for a debit below $2.50 there. So an 805, 810 call debit spread that expires on Friday would be the way I would pay Lilly. And also, I like that stock because that is one that's going to be somewhat insulated from an Nvidia earnings event, because it really is so, obviously it's going to be dragged one way or another with the market on terms of that it's part of that ETF. But Eli Lilly is really going to stand on its own as a bio company. So I like that. I don't even know if you'd have to wait right now, because you're not doing it intraday, you're doing it till Friday. The daily chart lines up well for you. So I would look at that, or you could wait towards the end of the day, see if you get a decent pullback. Obviously, if you can get an 800, 805 call debit spread, all the better than 805 to 810. But that's how I would play Eli Lilly. Very, very good pick there by Sawsonics.
Yep, very nice. I've got Luca nailing a couple of really nice picks. One is WBA. What do I think of that as a short? It has great relative weakness. Yes, it does. So you've got this low minus trend line breach, long red candle here. Earnings coming out 625, so no problem there. Rejection off of AVWAP-E. This is a weak stock and breaking through this horizontal support, M5. Look at that nice tight price action. Even when the market was going up this morning, this stock was getting pounded on heavy volume. COR was another short that you pointed out. Love that short. You can see the selling pressure today, and we go into the D1 chart, and there you can see you've got this low plus and low minus trend line, breakdown, compression. Really nice picks.
TN View said, should a beginner spend the first few months solely focusing on SPY? Perhaps should anyone share SPY to practice reading the market? But then Penguin Dynasty comes in and says, that would be counterproductive. There's no edge I can find to trading just SPY. I recommend paper trading realistic share sizes to the best of your ability on relative strength. Penguin, you have answered the question perfectly. That is the answer. No, you want to obviously study SPY, but hopefully you can both look at the market and also look at your stocks. Penguin, you have it exactly right, and that really goes towards that future question that we were talking about. Someone asked about Dell, Pete, for a day trade today. What do you think of Dell? I see it compressing here on the daily chart after a gap up on May 15th. I see it also, a lot of stocks here right around the all-time high. You have plenty of these all-time high stocks. If you wanted to be conservative about it, obviously you want to see Dell break 154.59. That's yesterday's high. But it is really strong today. It has a nice orderly upward movement. It's decently away from VWAP. A little bit extended on the intraday, but you're going to need the market to get much more of a move on Dell, and I don't see the market doing much. So if you're doing it intraday, I wouldn't expect to get much more out of Dell today. But look, there's no doubt about it. It's a good-looking stock. It's very bullish.
Yeah, nice tight orderly price action. You've got SPY as the gray line. You can see how the market pulls back, stock compresses, first little sign of strength in the market, stock takes off. Yeah, Dow looks good, but yeah, on a swing basis, you're going to definitely need a breakout from this compression right up in here. It is holding the breakout very nicely. It's also holding half of that long green breakout candle that coincides with the market breakout. So that's a good sign. Most everything that you're going to be doing from the long predicated on the reaction tomorrow to Nvidia and the FOMC minutes. That's going to either fuel the market higher or is going to force the market back down to test the breakout. So from a swing standpoint, I wouldn't really be adding in here. There's no need to trade ahead of that news. Wait for the reaction. And if we break out to a new high, you can add your swing longs. If we start coming back and checking that 525 level, you have to be more cautious. Just stick with the swings you have. Make sure that this previous breakout here holds.
We have someone here. Are there some sectors relatively safer than others for swing trades when looking to reduce exposure to major earning events like Nvidia? Well, I mean, obviously, especially during earnings season, you always want to not only look at what stocks have earnings, but if your stock has historically been impacted by the earnings that are about to happen that night. So put that aside, right? That should just be a given no matter what sector you're in. Look, clearly there are certain stocks, right? Boeing being the prime example of a stock that is born out of Satan's hatred for humanity. As an atheist, I say this. But if ever there is evidence of Satan, Boeing stock is it. That is a stock that you can just take technicals, crumple them up, throw them out the window, fuck it. It doesn't matter because any given day, there's going to be a Boeing news event. Some whistleblower died, some plane shuttered, whatever, it doesn't matter. Boeing is going to just defy gravity all the time. Hate that stock. Then you have other stocks that are very news sensitive, but are reliably in one direction, like the Nvidia, right? Nvidia is a very news sensitive stock, but if you look at the Nvidia chart, every single time those events have been a bullish event. So that's where you're trying to maybe take advantage of that volatility on the upside, but getting more upside than the technicals would normally indicate you might get. But look, the most volatile industry, not sector, but industry, so that pairs it down a little bit more, is biotech, right, Pete? I mean, when you agree that biotech is by far the most kind of volatile sector, industry. If you're trading that, you got to expect a roller coaster of a ride. The least out of all, if you're looking at what is the safest, you're looking at basic materials. You're looking at maybe utilities. You're looking at those, and so there's always with the market, and you can see this is how market makers kind of make their living, is all based on risk reward with volatility. The more volatile something is, the bigger your potential reward is. So they build in more risk, right? Your options are going to be more expensive because they're inherently more volatile. So if you're wrong, you pay more. When you're looking at the safer areas, just like any investment, if you're looking at the safer areas, if you're looking at basic materials and all that, yeah, you're not going to be subject to huge volatile downswings, but it's not like you buy MOS and you're going to be like, yeah, I struck it rich the next day. It's not going to happen. Maybe you make 10, 15 cents on the stock. Maybe you make 10, 15 cents on the option. So it's really a give and take between safety and risk that you have to balance. But there are certain stocks like a Boeing, like a ABV, that are just so inherently volatile. You should just tend to avoid.
Speaking of biotechs, I had A asked me about HUMA. So I thought I'd bring it up. It's not a stock that we frequently look at. What do I think of it? I like this breakout through horizontal resistance. You've got a high plus and a high minus that you're breaking out through. There's the previous all-time high. You're breaking out through that. As we zoom in, we can see that the stock blows through that prior high and it's able to hold these gains. So it checks the open of that breakout candle right here, finishes with a bullish hammer, and now we're getting some follow through when the market has been flat. So yes, this stock has buyers, and you can see the big volume here. So yeah, I like it. I would use this previous high right in here as my stop out point for it. It's going to be a volatile stock as long as, and it can come back and check that level, as long as it closes above it. So you don't have to watch what happens intraday. You need to make sure that the stock closes above it for a swing trade. And as long as this is preserved, yeah, it looks like it's got a nice head of steam. Put up the 5-minute, see what it's doing today. And there you can see how, yes, the stock has been able to continue to push higher on decent volume with the market pulling back a little bit.
You know, Pete, you could buy that stock right now. Then I'll go in, buy 5 million shares, watch it pop to 70. You sell it, we're good.
Yeah. Yes. So this is, again, it's biotech. So you've got to treat these with caution. But yeah, it looks pretty good. I like it technically. I don't need to know a whole lot about the company. I just need to look at what the price action is telling me.
I like it too. I'd probably get a quick call from JPM if I said buy 5 million shares.
Yeah, can you give us a day to work on that? I think the average.
I want it all in one candle. Really? Yeah, all right now. One block. Put it in.
You can see the volume here is minuscule. I did have a really good question. Would I exit JPM if I was long JPM on a swing basis? And that is a good question. I would be looking for an exit point because Jamie, how did you pronounce his name? Demon?
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 Some people call him
I always hear people call him Jamie Diamond. It's not Jamie Diamond.
Right.
But anyway,
I'll be there.
I guess that just the tone of his whole press conference was that he's getting pretty dang close to retirement. He's been fantastic, having been through the 2008 financial crisis. Boy, he navigated that beautifully. They never bent on any of their lending practices, so they never were in trouble. Didn't need any of the TARP payments, so they came out of the financial crisis with flying colors, and he's been a great steward for that company. So that is a little bit of a longer term concern, but the fact that he comes out and says we're not going to be buying any shares up here, the stock is too expensive, that is going to keep a lid on this stock. So I would be looking for an exit point now that you have closed below the previous high, which was around the $201 price level. Now that you've closed below it, this is a failed breakout. So you would be looking for any kind of little rally like the one we had this morning to exit the position. And you should still have nice gains unless you bought it yesterday, okay, or a couple days ago. If you bought it back in here post earnings, yeah, you probably still have some pretty decent gains in it. If you bought it way back here in January or gosh, back in November, you are making some serious coin. But yeah, that is where I would be exiting a long swing position.
PLTR feels like a dead pig. Dead pig, that's just so weird. I mean, why not dead cow or dead? I don't know. Yeah, no, look, no doubt. PLTR, obviously, despite strong earnings and all that, is not doing well at the moment, but is hovering right around that 100-day moving average. It's not moving far from it. That's at 2150. So what I'd be looking for on that, obviously because I own the position, is that it does not start straying down towards the 200 SMA. I'm anticipating a decent sized block trade actually coming into this stock by the end of the week. So I'd be looking to see if it breaks 2150, and we will see how that goes. Then what scanner do you use to find stronger weak stocks? Well, look at your screen. See what Pete is using there? You see on the side of the screen, you have all these categories. You see the stocks listed out there. I've used scanners everywhere, right? You know, whether TC2000, you get stock, you got all these scanners. There's no better scanner out there than the one that's offered on Option Stalker. There just isn't. It's a fantastic scanner. It deals with relative strength better than any scanner out there. You have everything from whether you want to look into the ones that surge into earnings, the ones that sell into earnings that are relatively strong. I mean, just go into the scanner right now and you click on, let's say, green Royal Flush, and you get SMCI, you get Lilly, you get FSLR. Look at those three right off the bat, the top three of them. All three of those are great longs. All three of those, fantastic long trades. Those would have been there yesterday. If you took any of those three longs yesterday, you would have you paid today. So, you know, if you're looking for a scanner that's just going to keep handing you stocks on a silver platter, it's right there. I mean, to me, your best scanner is you. Your best scanner is setting alerts, set alert, set alert, set alert. But in terms of finding the stocks to set alerts on, in terms of finding the best grouping of stocks, I use this all day long. You know, Option Stalker is you know, that platform Pete developed is fantastic. So I've been using it for years. Wouldn't use any other.
Thanks for the plug. You know, I'll tell you that I built the scanner. I started building it back in 2006, and then I really notched it up when I bought the source code for the current platform back in the financial crisis, 2008, 2009. Pretty crazy time for me to step forward and really take this to the next level. But I wasn't able to find the types of stocks that I was looking for. I had concepts and indicators that I wanted to develop myself, and no one else had that data. So I did it out of necessity. But as I've continued to add and grow and build Option Stalker and Option Stalker Pro, I've opened it up to the retail public, to other traders. And I'll tell you this, there's nobody that develops software that knows how to trade like I do. I can guarantee you that. They put a lot of nice features in there. And yes, you can do all sorts of scripting in other platforms, but what indicators am I supposed to even focus on? Which ones are any good? Which ones have been tested? I've gone through all of that, not to mention the indicators that we have that no one else will ever have because they're proprietary. And as we're flipping through charts, just look at some of these buy and sell signals, and I think you're going to get a feel for how accurate they are.
Adam Exec, you said currently in AXP 240, 237.5 for 531 and GS 455, 452.5 for 531. I assume you don't mention it, but I assume you're talking about bullish put spreads, put credit spreads on those, given the way you identified the spread. And considering holding due to them making back the majority of the down move and showing strength thoughts. Well, my thoughts are that obviously GS is in fine shape, but you put your strikes way too close to the price point. When you're doing bullish put spreads, the best way to do them, and when I say best, I'm talking about the proven way to do them when you're looking at a 90% or higher win rate on those, is you want to take a bullish put spread that is out of the money. You want to make sure you have two layers of strong support. I'm not just talking about intraday support or VWAP. I'm talking about simple moving averages. I'm talking about identified trend lines, horizontal support, something that's very, very clear. Two layers of strong support above your short strike, right? So for example, on AXP, your short strike is 240. If you look at AXP, at no point, no matter when you took that trade, is 240 considered strong support. Your strong support here is 229.35. That's where you'd have to go all the way out to on a bullish put spread. Now you need to get 20 cents on the dollar of the spread. So looking at that spread there, $2.50, you're looking at a 50-cent credit on that. In order to get a 50-cent credit by taking a short strike below $2.29, you're going to have to go way far out in time. Not worth it. If you look at GS, on the other hand, a better stock to do a bullish put spread on, your levels of support, you got to go. I mean, if you're looking, 420 is all the way down there. So you're looking at different levels of support. You're looking at 445 as a level. You're looking at 435 as a level. Doing a 445, 440 is probably better. You did a 455, 452.50. It's still a little close, but it's better than your AXP. I'd hold your GS. I think it's right now it's doing fine. But AXP, you got to be very careful with. It's way too close to your to the current price.
So imagine that you would have an indicator that shows you the current at the money option implied volatility. Well, if you look at GS or AXP, GS, the implied volatility is 23. On AXP, it's 18. You don't have enough juice in those options to be considering selling an out of the money bullish put spread on them. You really need to have that option IV at minimum 0.35 or higher. Well, la-dee-da. What if I had a search engine where I could go in and put option implied volatility from 35 up to, let's say, we could go do 40 since it just went there, up to 200, go sky high. What if I could go in and have an option liquidity rating of 0? That's going to be very liquid options there. What if I could go in and pick a stock that has relative strength on a D1 basis? That's a nice little list of 10 stocks that I might want to go in and look at some charts on and see if any of these look attractive for selling an out of the money bullish put spread, which, by the way, CRWD happened to come up on that list, and PANW event is behind it. You had mentioned, though, Harry, and it's a good point, that SNOW could be another little wrinkle because they announced earnings this week. But yeah, CRWD looks like a really good candidate. You bring up that chart. Did you see how easy it was to find?
And earnings are already out on crowd, so the reaction's been there. It's I like it. I like it a lot. I think it's a earnings are coming out. They're coming out on June 4th, so you still have time. I like crowd.
Yeah, and then you can filter out earnings as well. I'm sorry. You can filter out. There's also an earnings filter when you sell out of the money bullish put spreads. You want to make sure that you've got at least 3 weeks until that next earnings announcement. So no earnings within. You've got 1 day, and then let's put up 25 days, and then you would just go through and do all the same criteria that we had just done, and maybe a couple of the other candidates would even fall out. And that's how you do it. I mean, it takes you minutes to go find these candidates.
And you always have to understand how options work. Some people are like, oh, I do a bullish put spread over earnings, but I'll close it before the earnings. It's going to surge into earnings. Here's your thing. IV will stay high going up into an earnings event. This is how options work. Nobody's going to hand you pure leverage for free. The more chance there is for volatility, the higher the premium you're going to pay, and the higher that premium is going to stay elevated. What you're hoping for on a bullish put spread is that time decay just eats away at the premium of those options. By the end of your bullish put spread, you want both options to be worth 0, and you keep the credit that you got from taking the trade. That time decay is going to be mitigated by the elevated CNBC, by the way, just announced PLTR as its final trade. So there you go. Here comes your block trade soon. But it called it here. You heard it. You want your time decay to do your work for you, but when IV's working against you, that's going to mitigate the benefit that you get from time decay. So it really understanding deeply how options work, how the market works, is essential when doing these types of trades. Because if you don't understand how the market works, how these things work, then you don't understand why. You don't want to just hear us say, hey, don't take things over, that, and take it as gospel. Understand why we're saying that. And there's these, pretty detailed, strong reasons. I'm going to try myself one of these. Nice nicotine supplement, I'll tell you that. Anyway,
All right.
Um,
MMM, would we be buying MMM if it is able to hold the long green candle? Well, first of all, on a 5-minute basis, I don't like seeing this type of sell off here. And let's bring up that D1 and take a look at it. So MMM, nice breakout. You've got the first breakout right here, compresses, has an earnings gap up, pulls back a little bit, and now it's continuing to move higher. This long green candle is going to be your benchmark on what you do from this point on. And this is a pretty good example of what I'm talking about with the market. So you get this long green breakout candle, can't advance, and now all of a sudden you've got this long red candle. Well, the longer you sit up at that high, the greater the chance for this selling to gain traction on the backside, because that is a sign of resistance. So there's nothing that you need to do right now on MMM. If you are anxious about it and if you're considering it for a trade, you click GTC, you click on the top of this candle right here, and you click GTC, and you click on the bottom of this candle right here, and now you have it bracketed so that either way, you're going to get an alert on this stock, and then you evaluate, take another look at it.
okay. VKTX, someone said, they think it's forming a bullish triangle. If you think that, then no, it is not. It is not forming a bullish triangle. What it is it's just in a range here. It is in a range from 61.50 to around 79. Look at that daily chart. That is bearish. You have a stock that on April 26th breaks the 50 SMA. Great, looking good, right? Everyone, let's go along. It continues up for 2 days, then it compresses, literally compresses all the way to May 9th. Then on May 10th, bam, comes back down right to the 50 SMA. May 13th, May 14th, 15th, all the 3 days there, hangs right around the 50 SMA of around 72.65. Then on May 16th, bam, breaks back below it. Okay, fine, been dancing around it. Maybe it'll stabilize. Looks like on May 17th, it tries to pop back up to it, reject it again, closes below the prior day's low. All right, then the next day, does it have a rebound? No, the next day, hardly any movement at all. Today, now it's down $1.86. Now it is starting to move actively away from the SMA. Where's the next level of support? All the way down 54.32. You could have a potential free fall right down to that with a huge ATR 4.81. It's a huge ATR when you look at the price of the stock. You're looking at a bearish stock that has been unable to successfully maintain its break of the 50 SMA in a drop that's been occurring ever since this gap up on March 26th, right down to it, hung around it, breaking below it. This stock has no support at the moment, and you have a huge gap that it could enter at 57.56. If it enters that gap, look out below, because this thing could go all the way down to 38.54. So I would stay far away from that stock unless you're thinking of shorting it, in which case short away, because it looks fine for short.
Yeah, you can see on the chart here, you've got a upper trend line here, the green trend line. Till it breaks that, no interest on my part. Till it breaks this long red candle here, this trend line to the downside, no interest. It's compressing. It's as I mentioned earlier, this is the Pony Express. We're looking for the fastest horse. This horse, it's doing nothing. It's in the stable right now. And you also need to know a little bit about the company. And we traded this stock way back in here. We bought the breakout. And man, was that a nice one. But it's a weight loss biotech in clinical trials. They still don't have FDA approval. So one little whiff of bad news and the bottom can fall right out of this thing. So selling out of the money bullish put spreads simply based on price action, not a good idea. Because if their clinical trial doesn't come out exactly right, woof, you're going to see this thing go way down. So no, just wait for the dang breakout, wait for the news. That's what we do. We wait for the event and then we trade after that because the cat is out of the bag and our odds of success increase dramatically. That's what trading is about. It's not about just picking stocks that look good. It's about getting our odds as high as they possibly can be.
Look at this trade that was in the stock room today. So one of our great traders, particularly in the area of crypto, but great trader overall, MedHat, trades FSLR. Dave Wise, one of the best traders out there, no argument, I'm sure, from anyone on that, hops into that trade, FSLR, grabs some calls. Now, you look at the FSLR, you go, whoa, what are they all so excited about? When you see two great traders, both one right after another, enter a trade, you go, okay. Remember before, I mentioned if you look at the green royal flush, on Option Stalker, you see FSLR is the third stock that pops up. So now you're looking at the daily chart. What's everyone so excited about? Okay, clearly you have a huge breakout today, right? You have compression, all the way since May 6th, compressing today. You get a break of that compression on pretty high volume. You also look and you say, if I take the top of April 9th and I connect it to the top of April 11th, April 12th, again, May 6th, again, May 7th. Now you're having 1, 2, 3, 4, 5 touches on that line. That line comes in right around 204.59. You have a break of the upward ascending trend line again today. So now you have a break of a trend line. You have a break of compression. You have two different solid breaks of resistance on a stock on strong volume. You have two great traders in a chat room that pointed out, said that going long on the stock. And now you just see Dave comes in and he takes profit on those calls. No reason to mess around. You have an overextended move today on this stock, and you can expect probably some retracement later. But that's how it works, right? I mean, it's, you don't want to you never want to blindly copy any trade. But when I look and say, okay, I see two traders that I respect taking a stock. I know there's a technical. I look at the daily chart. I'm looking at the market. Okay, I'm not going to get any market help today. The market is flat today. So I need a stock that is powering up all on its own. And there is a stock, FSLR. Plus, I'm looking at, this is a stock that is not correlated to Nvidia. So just in case my calls stay flat, maybe turn against me a little bit, I can hold this stock into tomorrow, into Friday, without worrying too much about a market Nvidia reaction on it in the solar realm. So now I have a stock that might be a little bit of that's immune to a catalyst event. I have a great daily chart. I have every reason to look at that and go, this is a good long. And when I get profit, I have every reason to take that profit now. That's kind of how it works, right? I mean, you have it up there on green royal flush. You have two great traders in the chat room going it, and you have a daily chart that confirms everything and a flat market powering on its own. That's what you want on a day like today, where not very easy to find trades and totally acceptable to sit back and say, keeping my powder dry, do not want to trade this low probability crap. That's a trade you can look at and go, okay, there's something I can get behind.
I had a question on Starbucks. What would I do with Starbucks now that it's in the gap here? And you can see, trading bounces. Okay, this is catching a falling knife right here. This is not a good chart. So for seasoned pros who would be looking at this, fine. You want to go in and day trade it, fine. You can when you get a day like this where you have nice, consistent price action. I would not be swing trading this stock after a big drop like that. I would want to see it form a base over a period of at least a month, probably 2 or 3 months. Look, way back here, we're talking back in November. Remember what the market has done since November. Just a refresher. That's what the market has done since November. This is what the stock has done since November. You want to buy this stock? Not a good play. You want to day trade it from the long side? Then you've got to pick your points and you got to wait for these days when you've got lots of momentum like that. These stacked green candles. Okay, so on a day like this, you can day trade Starbucks if you're a seasoned pro to your heart's content, but a seasoned pro is going to know that their time is limited on it and that they are trading against a longer term trend, then they are going to know when it's time to take profits on it. So those are my thoughts on Starbucks.
I agree completely. And I mean, yeah, you could say Starbucks might look in the gap and you're looking at the daily chart, it's got a long way to go. But I mean, I agree with your assessment on the falling knife. Would you buy Amazon on the 50 MA? No, I would not, because a lot of people struggle with the idea of confirmation. Right. Now, look at any chart, right? Look at the chart that we were just talking about previously, where you're looking at that SMA and it just hangs around and hangs around until it finally breaks below it on VKTX. You need to see confirmation that institutions are looking at that 50 SMA on Amazon and considering it a buy point, meaning that support will hold, meaning that you will get a jump back up. Now you might be thinking, well, if I'm going to miss it, right? It's at 81.60. That's the 50 SMA. And if they start coming in buying, what if it's at 83 tomorrow? Get out of the supermarket mentality. You don't want things that are on sale. You want things that are more expensive today than they were yesterday. It means the trend is up. It means institutions are buying. That just means you have confirmation. And that confirmation should be what gives you confidence to then go in long on the stock. So if tomorrow you get a good bounce off the 50 SMA, you're looking at Amazon moving up, you want to trade it, great. Understand that Nvidia is going to impact it. Why? Because the news this morning on Amazon was they're holding off on ordering more Nvidia chips until their new chip comes out. And so depending on how the Nvidia announcements go during their earnings call, that should be a pretty big indicator and will affect Amazon. So I would wait and I would hold on that. But, it's the old thinking, buy at support, sell at resistance. I get it. But confirmation, institutions are confirmation. So they're putting in, they're deciding where that confirmation is. You have to wait for the confirmations. Don't try to be the institutions. Follow them and take their breadcrumbs. Trust me, their breadcrumbs are plenty.
Yes, so Amazon, very choppy, kind of back and forth stock as well. So not a great trend here. So when would Amazon be good? That's the question that you need to ask yourself. And it's not here. Just because it touches the 50-day moving average means nothing. So what is it that I would like to see in it? What is it that would tell me that institutions are in there? Well, hey, if it bounced today and put in a nice little green candle here, bullish hammer, and then what if the next day or the day after that, it had a nice long green candle that got through AVWAP-E? Yeah, that would tell me that they were interested at the 50-day moving average. So you come in and you click GTC and you double click on that candle right here, and you don't have to take a position. You have no emotional attachment to it. You don't even have to look at it, because you're going to get an alert when it crosses back above this price point here. And then you'll be able to go, yeah, that was a nice bounce off of the 50-day moving average. I'm above AVWAP-E. I've broken through this downward sloping trend line here, and the stock has a clean path to get to a new high. I could take a starter long here. That is how you trade.
Someone asked about QCOM. Yeah, look, no doubt QCOM looks great. Breakout, all-time high, all the things you want to see, except you have Nvidia earnings coming up. And again, that is going to impact it. Plus, you have an ascending trend line here starting from April 1st. Really wish people knew how to draw the correct trend lines. So many people don't know how to draw them correctly, and it gets them in trouble. Every time I try to explain it and do a video on it or whatever, people still mess it up. So I've abandoned the notion that people are going to get it right. However, if you just draw a line from the top of 4.1, connected to 4.3, connected to 4.4, connected again to yesterday's high of 520. You see it comes right in at today's high at 202.41, and that high 201.98. And if you go right into that high today, you'll see it bounce right off that trend line and back down again. So you have a stock that is hitting up against some resistance. It's bullish, no doubt, but you also have a catalyst event coming. It probably isn't worth it, because if you get a retracement in that stock, particularly off that resistance point, what are you going to do? Now hold it. You're going to hold it into yesterday with a market that doesn't look very, now that it's going nowhere. You're not going to get any help there. So what happens? You're down tomorrow right before Nvidia. You got to get out of the trade. You got to take the loss. Normally, the benefit of a D1 like that is great. It went back a little bit. I can hold it. I can hold it for a week or two. It's gonna continue up. It's got a great bullish D1. You can't do that here given the Nvidia earnings event. But you're right on your read of the chart. It's just look at that resistance point and look at the catalyst tomorrow, and that should give you pause.
Awesome way to conclude this video, because you brought out some great points. One is, don't paint yourself into a corner. So if you're looking to take swing trades, you have to be forward looking. You have to know that there are some speed bumps, potential speed bumps, some news events that are going to drive the market. And so, as we had both mentioned earlier, if you're looking to take swing positions right now, this has to be resolved. This compression, we are either going to pull back and this resistance is going to prevail, and then we're going to test the breakout. Well, there's no reason to add to any long swing positions until we have that information. If the market is able to break out tomorrow, we've been able to hold those gains. Buyers are going to get more aggressive. Then we can add after that Nvidia announcement and after the FOMC minutes are released. I personally would be buying Microsoft. I like that chart. That is my pick of the day. And Harry, what was yours one more time?
It's still going to be Google. I'm going to stick with Google. With Nvidia earnings coming up, I'm a bit hesitant on making a prediction on a tech stock. But if I had to, it would be Google right now. I really like the look of it. If you're looking for something that might be outside of the tech area, then Eli Lilly is another one. So I guess, you know what, to be safe, Lilly is probably the more conservative pick, where if you did an 805, 810, or if you can get it at 800, 805 call debit spread on Lilly, that would be a good alternative there to Google as well. There's a couple other out there, but like we mentioned, FSLR and so on. A lot of those moves have already kind of becoming a little bit of extended, but those would be the picks. Interested to see here how eBay, by the way, if eBay can break out of $53, that could be a potentially good bullish pick as well. But I'll stick with Google for the sake of consistency, and we'll see how we go.
Perfect. That sounds great. We will see you June 3rd, June 4th, whatever that Wednesday is. Good luck with your trading, everybody. We'll see you then. Thank you, Harry.
Have a good week, everyone. Bye-bye.